Welcome to TradeTheNBI.com. This is John. This report is for the 15th of the month, and well, the Fed did what it said it was going to do, which everyone was anticipating, so the reverberations were not that significant. But it's interesting if we look at daily, going back before this move, we could see it starting to develop way back over in here when we had our first crossovers on the daily, and then followed by what would traditionally be an intraday buy as well, with the steel dipping below after having had the orange reset, and gave a secondary signal for confirmation that this was going to continue. Even though the shakeout was still below zero, it slowly continued to move up. Now, you can see that we ended up with that cyan below red, which right before this breakout, clear indication at that point. All good from those standpoints, even when we look at like the 50K, had the buys from way back, and even for when we were talking about it, we were in that 85 range. This was right at 2200 intraday signals. Now, we talked about this one where it sold out a little early, but as I mentioned before, you would probably end up getting it to come back right to that exact same point because of the positive extremes. In fact, there's a little more to fill in at that particular point, but there wasn't too much shock over the Fed situation. You can see DOC spread started right here, which is where the cyan moves above the red, and that's just a fraction, 2254 versus the 49 that it took from that trade. So it evens out, but it still want that to adjust better to the ABM. Would have been a little bit tighter from an overall reading standpoint. We can see we've reached the warning line, a little bit of a dip here, so we could see some softening in there. We're finally seeing some shorts activate into this setup just a little bit as the steel was making a dramatic fade, and that's just the short-term buyers had taken their little push, take their money, reset, wait for a little bit of a pullback. NQ, not much change there. All the tech titans met with the president-elect, so that gave a little positivity to, I think, overall setup. And you can see the Dow, beautiful chart, but getting right to the ABM. And the ABM really shot up as the steel dipping below cyan right there. Even though it's below the red line, which is still bullish, you've got the red line way out of whack here in the super high range. And what's going to happen is that's got to ease off to indicate that there's a new flood of money and or shorts stepping into it, and that would back it off and get it back into a normalized point where you could actually see a modest retrace and have a complete reset, something that's difficult for oscillators. Now, this is a big problem because of that rate increase. The central banks have been trying to float this, trying to get a push, not happening, and now we're getting into the danger zone for euro as far as breaking parity at this particular point. So that is, and actually we can look at that from an intraday standpoint too, because this is a good one from the power mode too. The people that use that, despite the original short that took place all the way up here, which we had been following for some time. Dip below here, and then it turns red, and then we follow the dots, and they are moving lower. So the short actually, a secondary one, right around the 105.9, so right about just before 106, actually peaked up to the 106.5 range. Right in there was the peak, and it sort of held that for a little while, but there's been no new chaos event, which means that you're just going to get a return that's going to pull you back below that level. So any divergence above that line was an opportunity to additionally short, and then boom, that single break took place very quickly, and the spread right there, and it's just continuing. Now you have that orange caught in between. We just now had a dip below, but no subsequent move of the steel below the red, so it continues in that same trend range. And as long as that orange stays between this red and cyan there, you're going to look for continuation unless you see a new chaos event develop. So always good to see that in practice. Obviously, we going to get close to my 113. How could you possibly know from 140 we were going to be heading down to there? Well, we're not there yet, so we'll wait until that happens, and then we can all chuckle together since it has been long overdue. And again, oil, positive extremes keep coming up, and this is, it seems so obvious that shale will ramp up as soon as oil prices reach these certain ranges in the $55 a barrel range, and that OPEC doesn't quite get that is surprisingly, these are supposed to be intelligent people. It's very confusing. And obviously, with the rate increase, no point being in gold just yet, even though we can see some increases in demand for it. But you've got to resolve some of the things in India. And you actually have to see some kind of, I want to say, pressure on wages. And until you see employment numbers change with actual participation, I don't think that pressure is going to be there. And so, well, I think the Fed is both behind and ahead of the game. They're ahead of where things are as far as the ability for the current structure to absorb some of this stuff. They're going to have to raise rates, and they've been behind on doing that, but that's because they've been in a no-growth policy for so long that they can at least see that that's going to change to some degree. And we saw the beautiful short develop here from the buy-sell test D2 and chopped around quite a bit, but we got some real negative oversold setups that developed in there that gave some nice spike moves when we had the dip right there. Came up, didn't do a whole lot, and then it reset again right back over here for a buy setup right around that 22.51, and we're not that far off of it at this particular point. So, not bad, but it's going to be a little more choppy, and we expected some of this volatility to take place as that was happening. But at the end of the day, where are you going to go for yield? You're certainly now not going to be going back into bonds because you've got nothing there. And so it sort of fuels the year-end push towards my 23, and we'll see if we can get there before time runs out here. There really isn't a lot of impetus for shorts to step in, and because of that, it sort of limits the thrust. And until there's some kind of negative impetus that will bring some shorts into it, it makes it a little bit tougher because this is all got to be about new buying. And while there's been plenty of that, it's a little slower, and so that's where you get that kind of steady churning back and forth, up and down. People like to call it the ABCs, where you go up and then down and back up, and keep going from there, slightly higher. We haven't seen many of the pullbacks. This was probably one of the more dramatic days we've had in quite a while, and it was still just tiny as a percentage compared to where we used to be when you had that kind of a move, 15 points or so, and 1300. It was much more significant than it is here at 2250. So it's all relative. But still, doesn't mean that we can't take advantage of what happens from an intraday standpoint, and easy enough to do that with the overall bias being long from, well, way back. We've been talking about this for well before 2000, so none of that's a surprise. So from a long-term standpoint, it's been easy. From a mid-range, there's been some back and forth, so it's been opportunities, and we'll just keep looking for those and make the adjustments as necessary. As always, though, look for me on the Skype chat. I had a nice birthday. Thank you for all the wonderful well wishes. It was difficult, but managing and plugging away. So looking forward to really making some strong progress on making some adjustments to some of these additional programs, and as well as the strategies. So we're looking forward to that as well. As always, trade well. We'll talk again later.